Alright guys, welcome back. A bit of a different video again this week. So last week we gave the syndicate away for free for a free week, and during that time we opened the live room. So London live room and the New York live room was open to everyone for free. Me and Akil really had our work cut out. We had like over 100 traders in the room all week. So massive turnout, very successful turnout. But we had tons and tons of questions coming in all the time, so lots and lots of questions. So one of the things I thought to do was to write down some of the questions, and as we pump out these frequent videos, you know, I'm releasing a video typically every Tuesday. Akil will release a weekend a preview video on Thursday, and then Charles will release a video or Akil will release the video for the Forex market preview on Sunday. And as we push out these frequent videos, I thought, well, why not take some of these questions, turn them into videos, and give you guys the answers to some of the common questions you've been asking. So that's what I did. And the first video, this video I'm going to go over. Lots of you guys watch me do my analysis, and you see me build out these kill zones, right? Trend continuation trades, we'll identify a kill zone, we'll narrow it down, we'll build out our one-to-one, make sure our stop loss rules are met, and then I often say, all I need is my entry rules met now and I can get involved. And some of you guys are like, well, you know, that seems a long process. What do you mean by entry rules? Well, you often hear me refer to a lower low, lower close candle, or a higher high, higher close candle. And some of you guys are confused about where the close of the candle has to be, or is it, you know, a lower low from previous structure, or a higher high from previous structure, or the previous candle body, or the close, or whatever. So I want to make it very definitive, and in this video I want to go over the rules of a higher high, higher close candle entry, and a lower low candle, a lower low, lower close candle entry, and give you guys an example of where we might use that in the market as well, so that 100 out of 100 traders agree what I'm looking at is a higher high, higher close candle, or a lower low, lower close candle. So without the tongues getting tied too much, sit back, grab a pen, okay, take notes. It's a writer downer, and I'll see you shortly. Okay, so the reason I wanted to put out this video is because we get a lot of questions about what a lower low, lower close candle is, or a higher high, higher close candle. So in this example, I'm going to go for a lower low, lower close candle. Then I'm going to give you an example of when I would use that as an entry reason into a trend continuation trade. Okay, so first of all, what we're essentially looking at is when the market is trending, okay, and we are bearish, right? What we're doing is we're essentially looking for the best place to enter into a trend continuation trade. And once we've built out our kill zone, which you've seen in previous videos, we're identifying a kill zone, and then you'll hear me say, we just need my entry reasons met and I can get involved. And one of my entry reasons is a lower low, lower close candle, but it has to be in that kill zone. So first of all, what I want to show you is what a lower low, lower close candle looks like. Okay, so what we're doing as market is putting in candles, right? Excuse if they're excuse if they're pink, but here's, for instance, the candle wicks, and we're pushing up, pushing up, pushing up, and then what happens is what we're looking for is a lower low, lower close candle. And what I mean by that is we're looking for the close of the candle to close below the previous candle low. Now that can happen anywhere. So you'll see that this candle here isn't a lower low, lower close candle. This candle, whoops, this candle here isn't a lower low, lower close candle. This candle here isn't a lower low, lower close candle. And then we get a candle like this. So the body pushes down, we push down, so we put in a lower low, and then the candle closes below the previous candle low, making this a lower low, lower close candle. Okay, so what I'm going to do is I'm going to give you an example of where I would use this in identifying a trend continuation trade and using it as a reason into an entry reason. Okay, so what we're doing is we're looking at the pound yen. This is just an example, and we're trending, right? We are bearish, and we're putting in lows, lows, lower lows, okay? Now, we're looking for the best place to jump on this as a trend continuation trade. So what I say to myself is, well, I'm a trend continuation trader, so I'm going to be shooting for a retest of these lows, okay? Retest of these lows. So what that means is, if I'm shooting for a retest of the lows, I want to make sure that I'm getting at least a 1-to-1 risk reward, okay? Because I want to win more when I'm right than I lose when I'm wrong. And if I can enter into those types of setups every time, well, then I'm going to come out on top as long as I've got the discipline to come in and trade that consistently, right? So what I'll do is I'll bring on the ATR, because I use an ATR based stop loss. And for argument's sake, let's say that's 70 pips. So what I'll be looking at is putting my stop loss 70 pips above this most recent outside return. Okay, so we see that's 167.62. I've got a 70 pip ATR, so I want 70 pips above that, which is going to put me up at 160. So that's going to put me up at 168.30s, say. Okay, just an example, right? 168.30s. And now what I can do is, if I want to measure out where I get a minimum 1-to-1, I can use my fib retracement tool. This is quite a neat little trick here. You can bring on your Fibonacci retracement and go from your stop loss to where you're expecting to take targets at a retest of the lows. And what you can do is use that 50% Fibonacci retracement to ensure that your position for your entry is going to give you more than a 1-to-1 on the trade. So we bring on our fib retracement, measure out the 50%. We now know that our kill zone is going to be in this zone here, because I know that at this point I'm going to get a 1-to-1. I don't want to get involved any lower because I want a minimum 1-to-1. I know my stop loss has to be 70 pips above the high. Okay, so that's where we are. And then what I'll do is once price action pushes into this area here, this is where I'll be looking for that lower low, lower close candle. Okay, so as market continues, right, I'll let price action come to me. We're now in the kill zone. And you see we get a lower low, lower close candle here, right? This candle here, we get a lower low, lower close. I can't enter this candle because it's not going to give me a 1-to-1. It's not in my kill zone. So I continue to watch the market. We push up. We push up. We haven't got a lower low, lower close candle yet. And boom. See this? We break and close below the low of the previous candle, giving us a lower low, lower close candle entry. And at this point, I'll enter next bar market. So my stop loss now looks like this, and my target will look like this. Okay, so I'm getting a better risk reward by letting price action come to me. Remember, less is more in trading. You don't want to be forcing trades. And then you can see I'll be entering the trade. Bit of pain as we try and hit targets, but you can see eventually we hit targets. Okay, so that's what's meant by a lower low, lower close candle into a trend continuation trade. So we'd be doing the same thing in a bullish market, except we'd be looking for a higher, higher, higher close candle. Same principle applies though. Now some of you guys have got extra filters. I know some of you guys have got extra filters where you'll wait for RSI to go overbought, and then you'll look for a lower low, lower close candle. But essentially, it's all about that if-then thought syntax. Okay, we're waiting. We build out a kill zone. We then know where we can enter. We then wait for RSI to go overbought. If you're waiting for RSI to go overbought, RSI goes overbought. Tick. Then you just need a lower low, lower close candle in this kill zone. Lower low, lower close candle. Tick. Entry. next bar market, and you're in the trade. So hopefully that explains it, and I'll look forward to seeing you in the next video. Alright guys, that was it. So hopefully you got value from that video. Again, it wouldn't be for everyone because some of you guys know how to do this stuff, and we're not trying to teach you to suck eggs here. It's just that, like I say, we got in lots and lots of questions. We took some of the most common, and we're releasing the answers in this video content format, so it gives you guys some value. So we're going to be doing this regularly, weekly, and not only are you going to get to see me, footage from the live room and me taking trades and my trade setups and what's on my radar, we're also going to be releasing these Q&A type style videos as well. So if you haven't already subscribed to this channel, make sure you click below and subscribe. Also, my own YouTube channel, Jason Greystone, if you're an entrepreneur or you're into business, I'm going to be releasing lots of business orientated content on that channel as well. And obviously Akil Stokes, you've already subscribed to his channel already, I'm sure, but if you haven't, go and do that. And until next week guys, take care, and I'll see you then.